Thank you for joining me today for the Accounting Profession Matters video series. And I really should say thank you for joining us. I'm here today with Andrew Harding, who is our CEO of Management Accounting. And I'm Barry Melancon. I'm President and CEO of the American Institute of CPAs and also CEO of our global organization, which is a combination of the AICPA and the Chartered Institute of Management Accountants. And the sort of connection of public accounting and management accounting fits perfectly in our topic today, because our topic is about ESG and the changing world, the changing set of expectations from multi-stakeholders as it relates to what businesses should be accounting for and how they should be reporting it. And I think the most important thing that we need to understand is how important and critical the profession, the accounting profession broadly defined, will be in moving the needle in this space that is the expectation of policymakers, investors, and the like. If you think about what is being asked to be addressed by business and government, frankly, as well, is the notion of what does a business touch in its strategic operation? How do we measure that? How do we have controls around that measurement? How do we create reliability around that measurement? And how do we report it so that others can understand what a business is all about? And that broadly falls into the ESG space. And it's clearly a debate that's happening and a discussion that's happening throughout the world. And maybe one of the most important things is to understand what came out of the recent COP26 event in November of 2021. And that is to understand the new ISSB, which stands for the International Sustainability Standards Board. If you look at the activities of COP26, there were a lot of things discussed and actually presented. The fact of the matter is probably the two most significant was a major commitment from the private sector of trillions of dollars to fund ESG type of activities. And the second was actually the establishment of the ISSB. And it was really reflective of about a year's worth of work leading up to COP26 in order to try to create a new baseline, a new consistent set of standards and measurements throughout the world. And it's moving very quickly. Now, all of you listening will know the history and importance of the accounting profession in accounting or financial information. But if we think about it in using the terms business information, and if we really think about a business's responsibility to have people, planet, and prosperity all part of their business information set, we can understand the importance of what just happened with ISSB. Most business today, regardless of its size, is in fact multinational. It has, at a minimum, if it's a small business, it serves large business, which has operations on a global basis. And it's important that we have a baseline of information that is actually measured, reported, and ultimately attested to, so that users of information can have reliability as to what this information flow is all about. And that falls into the ESG space. I think it's also important to know that some countries and some areas may use the standards that come out of the ISSB as, in fact, building blocks or sort of a harmonization notion. There may be additional requirements out of different regions or different countries that are unique to that particular environment. And that's fine. But it's important as we enter this new phase of reporting of information that is broadly defined inside of an organization, that we have as much consistency across the borders as we possibly can. I like to say that this harmonization that has occurred has taken place in about 6 months, while accounting took maybe 6 decades. The reality is it took a little bit more than 6 months, and it will take some work into 2022. But it's important for everyone to understand what's involved here. These new standards are going to come from a new standard setting board that will sit alongside the accounting standards board. So it's not the accounting standard setters that actually will be setting the standards, but instead a new board that is being created. It's a global board with global footprint, presence in the United States and other major countries of the world. So it's not centered in just one country, and it is very market connected. In fact, one of the major notions of what we negotiated in bringing this to the market is an extreme commitment to market-facing issues. And that's very important in all standard setting, but particularly important in the ESG space. And so as we look at the new standards that will come about, we wanted to get it a jump start. And at the same time the announcement was made, there were 3 different types of documents that were submitted to the newly created board for its consideration in its first standard setting operations. And it's important to understand that in the United States, we had the United States Sustainability Accounting Standards Board that has been around for about a decade, SASB. In addition to that, there is a framework that has been about for about a decade called integrated reporting. Those 2 were merged together prior to COP26, and then all of that was merged into the IFRS, which is the oversight board, the board of trustees that sits over the Accounting Standards Board and now the newly created International Sustainability Standards Board. This creates oversight from government and other types of activities around the world, creates independence in the standard setting process, and the operations aspect that this board, or these expectations that this board puts into the ISSB, ensures the market connectivity. Now, if you think about reporting that we're talking about in this space, it really is about how is the information gathered? What are the controls around that information? That starts inside the company. That starts with management accounting. It's not something to be thought of that's outside someplace else. It is actually part of the information infrastructure inside of a business. And the controls that produce reliability and trust inside of a company for its board and its chief executives is very important in the establishment of these new standards. Ultimately, when that information is reported, it should be reported on a consistent basis to the world at large. And obviously, in due course, not immediately, but in due course, investors and others will expect some type of audit or assurance over that so that they know that information flow is actually reliable and consistent from company to company. And this is an important part of understanding the profession's commitment in this space and its ability to really help meet the expectations that are being set by multi-stakeholders, shareholders, employees, other types of investors, regulators, et cetera, in this new and changing world of information. And that is not to say financial information doesn't remain important. It certainly does. It is very important. But the fact is that as accounting standards have changed, so too will sustainability standards. And the ability for the profession to first produce the information and ultimately present it in a meaningful way to these multi-stakeholders will be very critical. Which leads me to management accounting. And at this point, I'm going to bring in our CEO of management accounting, Andrew Harding, to just speak a little bit about the role from inside the company, the management accounting space, and really being responsive to demands in this ESG world. Andrew?
Barry, thank you. Talking about management accounting has got over a century of history, but like all areas of the profession, it's moved on during that time and changed during that time. But one thing it's always done is measured more than just the money. It's measured the resources business uses so that it can see how efficiently those are being deployed. It looks at wastage rates. It looks at all kinds of things like that. And that's been going on for a century. As it's evolved, though, we've seen the evolution of management information, the way in which information is reported to decision makers. And we've also seen changes to the way in which management accountants sit in the business. They no longer sit aside from the business in a back office. They sit beside managers as finance business partners, dealing moment by moment with decision making and also creating businesses. Finance is no longer sitting in the back office saying no. Finance is sitting beside business saying, this is how to do it. And have you thought about doing it this way as an alternative? How can we make it better? And this really does slot right into what we're talking about here on ESG. It's a long hold maxim that if you want something to get done, you start by measuring it, and that's what we start with here. That's what management accountants do. Very much with this, we're looking at reporting for the whole business. If we go back 50 years, balance sheets of businesses represented something like 80% or more of their value. Today, it's around about 10% of their value. The traditional balance sheet doesn't account for the whole business. It doesn't account for the value of that business. So we need to look at other things. We need to look at the whole business model, all of the stakeholders that are involved in it, the supply chains, the employees, the intellectual property in the business, the access to raw materials. All of those things count. All of those things need to be recorded by finance, need to be measured by finance, and reported to boards, so that boards are making the right decisions for the whole of the business, not decisions based on 10% of the business, but decisions based on 100% of the business. So that's broadly what we're aiming to do with management accounting. The recently released integrated thinking principles are an excellent resource to help management accountants begin their journey towards better ESG reporting and integrating it into all of the work that they do in the business. Barry, back to you.
Thank you, Andrew. So we can see that the world is in fact changing. And to be honest, there will be people who have debates about sustainability specifically, but that's okay. But the role of the profession really is about to be responsive to those demands that government leaders or business leaders or lenders or stakeholders have as it relates to the information, the broad-based information that is necessary to understand the risk and the business decision-making that's taking place in any one organization. So if we can think about it this way, society gives business the legal authority to operate. In response to that permission to operate, there's certain expectations that are put on business. In today's world, that expectation is to be responsible in this broader ESG space, particularly in today's world and a climate environment. And what these standards that are going to come out of the new ISSB does is gives us a baseline for that type of information. And clearly, when you think about the role of the profession traditionally, the role is about making sure that that information and risk information is presented to boards and regulators and society leaders to understand what a business is actually doing in the marketplace, because either people are investing in it, working for it, or in fact the business is having some kind of broader impact on society at large. And over the years, those expectations have changed, and we're in a state of change right now. But what has not changed in this process is the profession's commitment to being the honest broker of this information, to either inside the organization or, in the case of information that's presented broadly, to reliable flows of information that helps decision making. And we all know it's a complex world today. And so that reliability and that consistency information is very, very important. And that's really what the profession is committing to do. And clearly, the expectations of the public will continue to evolve, and we will evolve with those expectations to be focused on understanding the risk and the decisions that propel an organization forward inside this trade-off of permission to operate and the positive good that organizations do. It's an exciting time. It's one I think the profession really needs to embrace. And I know that we have all of the players in our business ecosystem expecting us to embrace it, from government leaders and investors, employees, and actually business leaders themselves. So thank you for joining us today with a very high-level overlook of the changes that are taking place in the ESG space and the standard setting. And we are committed to doing more, to keeping all of our members and the people who work with our members up to date on the requirements, and to make sure that we do our part in delivering on the expectations of the public. Thank you very much.